Welcome back to Midcap Radar. One particular stock that we want to discuss is Vatek Wabag. We had the management on our show, after the company declared its Q4 results yesterday. The management came on our show. They came and clarified about, what exactly happened in terms of Q4 gone by, what was the reason for the dip in sequentially in the order book, and the kind of order inflows that they're anticipating. And post that, there has been quite a bit of a sharp recovery in Vatek Wabag. The stock saw an intraday low of close to 915 rupees a share. Stock now has rebounded quite sharply to almost 970 rupees a share. But, we have another management lined up on the show. The next management is NIIT Learning Systems that just reported its Q4 results a while ago. The company reported a decent set of Q4 numbers, margins expanded, and EBITDA jumped by 11% on a year-on-year basis. To discuss this and more, we have Sapnesh Lalla, the CEO of NIIT Learning Systems, with us. Good afternoon, sir. Welcome to CNBC TV18. First up, could you quantify the kind of constant currency growth that you saw both in CC terms, both on a year-on-year basis as well as on a sequential basis?
So on a year-on-year basis, we saw approximately 10%, a little over 10% constant currency growth. On a quarter-on-quarter basis, we saw 2% constant currency growth. So for the year, we had 10% or 10.2% constant currency growth.
The street seems to like your numbers, Mr. Lalla. So we want to understand what the outlook for FY25 is. FY24 revenue rose around 14%. Do you expect this to continue? What are the demand trends looking like? And which are the segments which are driving growth?
So we still see significant headwinds from a demand perspective. We've seen compression in demand with our existing customers. What we are, however, able to do to offset the compression in spends with existing customers is to bring on new customers and to increase our wallet share with several of our existing customers. This year, we expect growth to be a little bit higher or in line with last year. So we expect between 12 to 14% growth in this year.
Mr. Lalla, so you're expecting 12 to 14% growth on a YOY basis of FY25 over FY24. So are you on track? Earlier, you had guided the street to a revenue milestone in the range of $400 to $500 million by FY27. So are you on track, despite the fact that you just mentioned quite a few headwinds still exist?
Yeah, I think the way we are thinking about it is, you're right, absolutely, that we have headwinds to deal with. But we also have a very strong balance sheet and a pipeline of inorganic opportunities. So we expect that by augmenting our organic growth rates with inorganic opportunities, we should still be in line with meeting our goals.
So in that case, does this mean that your future growth will largely be led by inorganic acquisitions or inorganic growth? Can you give us what the pipeline is looking like? Anything that we can hear in this year itself when it comes to acquisitions?
In terms of specifics, you'll get to know when things materialize. But we have organizations, very attractive organizations that we are looking at. And to your comment on whether majority of the growth is going to come from inorganic, that's not accurate. I think we will have a balanced opportunity between organic and inorganic.
Okay, one more thing which we want to understand. Every time you make an acquisition, what is the kind of valuation you typically give to the organization you look to acquire? And generally, in terms of the size of the acquiring company or the company that you're looking at, what would be the size in terms of how much it would be able to add to your own top line?
So we don't look at blockbuster acquisitions or like a one-and-done style acquisition. We look at acquisitions that add to our capability or bring a new market segment for us to serve, or look at a new geography. So those are the three aspects that we look at. The sweet spot for an acquisition is between $20 to $40 million in revenue. So we are not looking at organizations that might be $200, $300 million in revenue. We look at organizations that can help bootstrap our operations, maybe in a new geography or with a new segment, or augment the capability that we have. And that's really our focus.
Okay. I wanted to understand this 12 to 14% target that you have for FY25. You did indicate there are still some headwinds and you're still expecting decent growth in FY25. What is making you so confident on that? Is it coming in from existing clients or you are looking at newer clients as well? And what is the indication on budgets with large clients right now? Have they said anything in their commentary or their indications?
There is uncertainty in terms of spend. Organizations are very hesitant to write large checks, but organizations are willing to look at opportunities which enable them to transform to a lower cost basis. So there are opportunities for cost takeout. Those opportunities the new opportunities are taking longer to close as compared to the past. But I think we have a number of large, interesting opportunities in our pipeline that gives us or that enable us to create an expectation of 12 to 14% growth as we look ahead.
Mr. Lalla, you've given us the top line guidance of 12 to 14% growth that you wish to achieve in FY25. Give us a sense of the margins trajectory and also the bottom line. What is it that you're targeting? Secondly, what is the impact of competition, especially from a player like Upgrad? Is that impacting, the kind of revenue visibility that you're seeing from clients?
So we actually do not compete with Upgrad. Upgrad addresses very different market segments as compared to NIIT. However, we have significant competitors that we do compete with. Some of the largest GSIs like IBM and Accenture are our competitors, just as a number of regional players like Seagos is a competitor. We are very well placed from a growth and profitability perspective, as well as the value that we bring to our customers as compared to our competitors. And that's the reason why our customers trust us. We continue to have a 100% contract renewal record with our customers over the last almost 10 years. I think your question on what's our view on margin, as you are probably aware, we finished the year with about 24% EBITDA margin. We expect a little bit of a knock on the margin as we look ahead. We think that we might end between 22, 23, 24. So somewhere in the range of 22 to 23%.
Okay, all right, Mr. Lalla, such a pleasure speaking with you. Thank you so much for joining us and patiently answering all those questions and being very candid about what's happening in the industry as well. That's the word coming in from NIIT Learning Solutions. Ended FY24 on a strong note. The stock is higher by 2.5%. They're expecting 10 to 12% revenue growth in FY24 with margins in the range of 23 to 25% as well. We'll slip into a break. When we come back, we'll talk about markets and we'll put focus on Cipla as well. It has received FDA approval for an injection used in treating hormonal tumors. The stock is surging in trade. We'll talk about that in just a bit.